This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend. I'm Ross Greenwood. It is great to have your company. Coming up on the program today, this week, the latest inflation rate will be released. It's the last and most important piece of information that will determine whether the Reserve Bank resumes raising interest rates here. It's the last thing the government politically and economically wants right now. Well, today we speak with the Treasurer, Jim Chalmers, who argues that the economy is still on track.
So we expect the number on Wednesday to show that inflation was persistent in our economy. That's not a good thing, of course.
But the government will also spend $22.7 billion in the next 10 years supporting what it sees as key industries: hydrogen, solar panels, critical minerals. But that strategy of supporting or propping up industry continues to be criticised by the government's own Productivity Commission. And Assistant Commissioner Alex Robson is on the program today.
To the extent that they're regarded by other countries as protectionist measures, other countries could retaliate.
And as the federal election comes ever closer, one key battleground is Peter Dutton's support for the nuclear power industry. The surprise is the idea struck more of a chord than the government might have expected. Well, one of this country's most ardent advocates for an Australian nuclear industry, Aidan Morrison, will be with us today.
Australians aren't very impressed about the old scaremongering and sort of saying this is not safe. It's been proven very, very safe around the world.
So all that and plenty more coming up on today's program. But look, let's start with this week. The Bank of Canada cutting official interest rates for the second consecutive month. China cut key rates. Europe, Switzerland, Sweden, Brazil and Mexico have all cut rates, and markets expect the US to start cutting in September this year. But here in Australia, there's a broad expectation that the next move of rates is up and not down. It seems Australia economically is out of whack with the rest of the world. And that goes to the heart of a worthy economic experiment, and that is to try and keep as many people in jobs as possible while waiting for longer for inflation to come back down to the 2 to 3% target band. Well, the problem with the experiment is that there are few, if any, examples of it working anywhere else in the Western world. And remember, the Reserve Bank's recent policy of prioritising jobs as well as inflation was imposed upon it by this federal government. Generally, when there's inflation, interest rates are moved up aggressively to squash demand and to squeeze inflation out of the economy. It will hurt badly and many jobs can quickly be lost. But the economy will reset. But that's not what's happened here in Australia. This week, the latest quarterly inflation number will be released. It's the last key piece of economic information for the Reserve Bank before it makes its latest interest rate decision the following week. The annual rate to the end of March was 3.6%, but on Friday, Bloomberg's survey of economists suggests that inflation to the end of June rose to 3.9%. The underlying rate, the forecasts say, will be steady at 4%, and that too is still way too high. So it leads to the inevitable conclusion that pressure is building for a Reserve Bank rate rise. But clearly that's not good for governments that are headed to the federal election. Well, late this week, I spoke with the Treasurer, Jim Chalmers, and put that whole scenario of rising inflation and interest rates to him. Well, what I got back was a message, and I suspect not just for the public and for business, but maybe also for the Reserve Bank as well.
Inflation has come off really quite substantially since those peaks in 2022. When we came to office, it was 6.1%. The most recent quarterly data, 3.6%. And the peak was in the high sevens. And so we need to remember that inflation has come off really considerably in our economy. What we've seen around the world is that inflation doesn't moderate in a straight line. It zigs and zags a bit, and often at around the level we're at now, we've seen in other countries it plateaus a bit before it starts to go down again. We saw that in the US and we've seen it in other countries too. So I'm confident that even though the inflation number that we expect to see on Wednesday, we expect inflation to have been persistent in our economy in the June quarter, but we are still confident that inflation will continue to moderate after that, partly because of the design of our cost of living policies, but also because the shape of our inflation challenge has been really similar to around the world. If anything, our core inflation has dropped quicker than elsewhere, but the shape is broadly the same. We've heard the Reserve Bank Governor and the Deputy Governor both make that point. So we expect the number on Wednesday to show that inflation was persistent in our economy. That's not a good thing, of course. But overall, we have made really quite considerable progress, and we expect that progress to continue into the future.
You watch the markets pretty closely, though. You're aware that, unlike most other major developed OECD countries right now, which are expecting interest rate cuts, and some of them have already seen them, that in Australia, the markets right now are expecting the chances of an interest rate rise. So that's a different scenario than what's playing out in other parts of the world.
Well, I think the major difference between us and other countries, Ross, that you would understand, is inflation peaked lower and later in Australia than it peaked in other countries. And other countries that we compare ourselves with have usually got much higher interest rates than we have as a starting point. And so I think those are two important points to remember. Obviously, I'm not going to engage in a running commentary about decisions taken independently by the Reserve Bank. But when it comes to our inflation challenge, the shape is broadly similar to what we've seen in other countries. The difference is our inflation peaked lower than it did in those countries, and it peaked later than it did in those countries. And so some of them are a little bit further along when it comes to moderation of inflation in their own economy.
But you would be aware, because the government shares the aspiration of the Reserve Bank, that it would allow the inflation rate to remain above that target band in order to try and preserve as many jobs as is possible. The real problem, as you saw in the latest employment numbers, is that there's still a lot of jobs being created in this country, which is, to be honest, a very good thing for our economy and a very good thing for those families, because without those jobs, there would be significant amounts of hurt. The real problem is it's not actually bringing down the inflation rate fast enough.
Well, a couple of things about your question. I mean, first of all, you're right to acknowledge that the labour market's been really resilient. Well over 900,000 jobs created in our first term is more than any other first-term government on record, and that has been a source of strength. But we have seen some softening in the labour market. You would have followed job ads and some of the other indicators around hours and the like in the economy. And so we've seen a weakening in the jobs market. We've seen the unemployment rate go from the middle threes to the low fours. But we have been creating a lot of jobs in the economy. That's a good thing, not a bad thing. I think you're also right to identify in your question, Ross, if I may say so, that as the Reserve Bank Governor has said and the Deputy Governor has said as well, there will be an important number on Wednesday, but the Reserve Bank Board, when it takes its decisions independently, it weighs up a whole bunch of factors in our economy. And I think sometimes the commentary too easily forgets that at the start of this year in the March quarter national accounts, we saw the economy was very soft. We saw discretionary spending was more or less disappeared in our economy. We saw savings rates had come off quite substantially. And so no doubt the Reserve Bank Board, when they take its decision independently, they weigh up all of these things, the inflation numbers, the state of the job market and the like. I think there's another important point here when it comes to, which is a bit like the point I just made about discretionary spending in our economy being almost non-existent. And that is when you think about the inflationary pressures in our economy, we expect the big drivers on Wednesday to be things like insurance and rent and petrol. And of course, petrol is impacted by the global oil price and all this uncertainty we're seeing in the Middle East. None of those factors are about government spending. And from time to time, you'll read commentary that pretends wrongly that government spending is the primary determinant of prices in our economy. Of course, that's ridiculous. Even if you think about the last year that we've just finished, the budget year, an extra, I think, $12 billion of spending in the context of a $2.6 trillion economy. So budgets aren't the primary determinant of inflation or prices in our economy, but they can help. That's why we are doing our bit in the fight against inflation. We've delivered those two pretty substantial surpluses, which the Governor has said is helping in the fight against inflation. And we've also designed our cost of living help in the most responsible way that we can. And this is how we help rather than harm the fight against inflation.
All right, but you be aware, as I'm aware, that it's not just the federal government that has cost of living measures or indeed extra spending, in particular wages of public servants and others that are above inflation, significantly above inflation. Now, the fact of the matter is that it's government in general across Australia that is adding to spending. And you take Chris Richardson as one economist who certainly has pointed this out. and says, of course that's inflationary. Of course that is adding to that inflationary pressure. It's not taking away inflationary pressure. That puts more pressure on the Reserve Bank to react. And that's the reason why I would suggest to you that perhaps if there is future interest rate increases, that government does play a part in that.
Well, I'm not sure I agree with you there, Ross. I mean, as I just said, government spending is a tiny, tiny sliver of our economy. In the Commonwealth sense, $12 billion out of a $2.6 trillion economy last year. The states cumulatively wouldn't be much different to that. I welcome the assistance they're providing the people that we jointly represent. People are doing it tough, and we can't forget that. But what we've been able to do at a Commonwealth level is to make sure that cost of living help, whether it's a tax cut for every taxpayer, energy bill relief for every household, cheaper medicines, rent assistance, all of these things are helping rather than harming the fight against inflation, because we're doing it in the most responsible way we can, at the same time as we deliver these two quite substantial surpluses. We've turned two big Liberal deficits into two big Labor surpluses. The Reserve Bank Governor has made it clear that surpluses are helping. And that's because we're managing the economy in the most responsible way. And what we're doing here is we're fighting inflation, we're repairing the budget, but we're doing it in a way that doesn't smash the economy, and we're doing it in a way that recognises the legitimate pressures that people are under.
But also the budget itself actually forecasts 10 consecutive budget deficits, which increases the debts for Australians into the future. So does that mean that measures such as the Future Made in Australia, which is $22.7 billion over the next 10 years, is that genuinely affordable for Australia in a time when it's going to go into significant debts over that next decade?
Well, a couple of things about that, and I'm pleased you asked. I mean, first of all, we can't afford not to invest in our future industrial base, because so much of our prosperity will come from that intersection of industry, energy, skills, resources, and our attractiveness as an investment destination. That $22.7 billion is over 10 years, as you rightly pointed out. It's all about leveraging more private investment in our economy, so that we can create prosperity into the future. But even of that $22.7 billion over 10 years, only about $3.8 billion is over the next 4 years of the budget. And the most of it is these production tax credits, which don't begin until 2027. And so I think it is, to be fair, a real stretch to pretend that the Future Made in Australia agenda is putting upward pressure on inflation when it's a 10-year plan and where the bulk of it begins in 2027. And also, that kind of analysis, I think, or that kind of presumption ignores the fact that this is all about attracting more investment in the jobs and industries and skills that we'll need into the future, so that we can deliver another generation of prosperity in our economy and in our society.
And some of those critical minerals that you would otherwise be supporting, of course, they're in big trouble price-wise at the moment. Mines are being closed. BHP has closed its nickel operations in Western Australia, and there's pressure on other lithium operations right now. The question is whether this is money being put in by government, effectively propping up businesses that would otherwise not do so well in the open market.
I don't see it that way, Ross, respectfully. I mean, first of all, of course, there's been some volatility in markets like nickel and in other markets. The global conditions have been uncertain and in some cases problematic, but our overall prospects in critical minerals are incredibly strong. Critical minerals are the opportunity of the century for Australia. There will be bumps along the way, there will be volatility, and of course it's disappointing when you see some of the sites like those which you just referenced being paused, like we saw when it came to Nickel West. Of course that's disappointing, but the overall outlook for Australia in critical minerals is really quite strong. There's a lot of interest and a lot of investment, and that is a really good thing. And when it comes to our investment, what we are proposing to invest in these critical opportunities for Australia's future are only a sliver of the private sector investment that we expect to see and that we need to see in order to make the most of this immense opportunity. The Future Made in Australia is not some kind of free-for-all of public funding. It is responsible, it is robust, and it recognises that with some public investment we can leverage the private investment that we're going to need to create the industries and jobs and communities and prosperity that we all want to see as Australians.
Jim Chalmers, always great to chat to you, and many thanks for your time today.
Appreciate it, Ross. All the best.
Well, one organisation that might not be in the Treasurer's good books right now is the Productivity Commission. The government's key advisor on productivity this week again questioned the Future Made in Australia policy that's budgeted to spend $22.7 billion supporting key industries in the next decade. Now, you've just heard the Treasurer defending that expenditure, but the Deputy Chair of the Productivity Commission, Alex Robson, this week said the policy could affect Australians' future standard of living. He said a $100 subsidy for domestic producers can have the same protectionist effect as a $100 tariff imposed on foreign competitors. Well, I spoke with Robson late this week, who explains that the findings from the Productivity Commission's 50th Annual Trade and Assistance Review, that's where this information comes from.
50 years and going strong, and we're looking forward to another 50 years of the Trade and Assistance Review, which basically is a transparency exercise around industry assistance in Australia and the extent to which trade policy is changing both in Australia and around the world.
OK, so we should try and break this down for people to try and give the importance to them. The Productivity Commission has always said that Australians should be able to buy the cheapest goods that they possibly can, no matter where they come from. And so this is about trying to break down trade barriers so that we have access to imported goods, but on top of that, to create barriers or take barriers away so that local companies can also be competitive.
That's right, Ross. So what we've seen over the last couple of decades, both in Australia and around the world, is that tariffs and quotas, those sort of at the border trade protectionist measures, have come down quite a bit, and the government's announced 457 nuisance tariffs coming off this year, which is a great announcement. But what's been happening both in Australia and around the world is that those have been gradually replaced by behind the border industry assistance measures that take the form of hidden subsidies, and they can be in principle just as protectionist as the tariffs and quotas that they're replacing.
You could almost argue that this started with the Donald Trump policy of Make America Great Again, to try and bring more manufacturing onshore to the United States, chip making, a whole range of other things, but then was taken even further by the Biden administration and its Inflation Reduction Act, which is massive and, of course, means that capital is now flowing to the United States seeking that assistance.
Well, that's right, Ross. And over the last year, the IMF, and we report this in the Trade and Assistance Review, they've tracked these industry assistance policies just in the last year, and there were 2,500 of them around the world, and 70% of those turned out to be trade distorting. So this is the issue that Australia is grappling with. We've got these legitimate policy challenges around national security, vulnerable supply chains, and the transition to net zero. We've got other countries engaging in this industry policy and selective and discriminatory intervention in their own countries. And the question really for Australia is, how do we respond to that in a way that is not too protectionist? Because we rely on open markets and free trade for our prosperity.
OK, so is the danger, though, if we do not respond at all, that we simply lose business to those countries that have very heavy subsidies? You know, capital is mobile. We often talk about this here. So if, say, for example, an energy company, a brick maker, decides to base themselves in the United States because they get greater government subsidy along with a whole bunch of other stuff, that makes commercial sense as compared with staying in Australia, where maybe those barriers are not as great or something like that.
That could be a risk, Ross. On the other side, there is the risk that you could simply distort things even further. And so what we've said in this report and in other places, and we'll have more to say about it in the future, is that what you need to do with these kinds of policies is keep them transparent. So that's what the Trade and Assistance Review does. It's a transparency exercise. Subject them to good cost-benefit analysis that's publicly available, and that would pick up some of the issues that you're talking about, those risks on the other side, and also have our exit ramps. So if it turns out that things don't go the right way with a particular industry policy, you keep an eye on the taxpayers' dollar amount that's invested in these things, and if it turns out they're not achieving their objectives, you've got a way out of them that's not too expensive for taxpayers to fund.
OK, so the Future Made in Australia policy that the government has come up with, $22.7 billion over the next 10 years, that is highlighting certain industries. Critical minerals is one, hydrogen is another, where the government decides that it wants Australia to be leaders in those areas. Now, you argue that the government should be a little agnostic about this. The government says, no, we're going to go head along and try and support those industries. What's the danger of that approach?
So we haven't evaluated those particular policies in this report, but what we do highlight is that the idea of comparative advantage, so Australia being a relatively low-cost producer in various industries, that is a very difficult thing to actually work out from the data, and that's even looking backwards. And so if you're trying to project that forwards, well, where are the industries where we're going to be competitive in the future? It's not that easy to project or even manufacture that sort of comparative advantage. And so that's the risk that we're just pointing to here generically in these things, is that you always want to subject these kinds of policies to good cost-benefit analysis, keep them transparent, and also have an exit ramp if you need to.
And there's another question which comes with that, and that is, should the government actually be making that analysis itself, or should it be left to industry to make that analysis? In other words, why does a taxpayer's dollar go into those areas, those key areas, when it could well be actually that private enterprise should be funding those things?
Well, a good cost-benefit analysis would tell you a lot about that. And so that's why we welcome the government's national interest framework. We think that there's potential improvements to that could be made, and we'll have more to say about that later. But what you need is both industry doing that work, but also if the government's going to decide to intervene to put taxpayer dollars at risk, that analysis should be done. And this has been an issue in Australia for a long time, Ross, that many of these policies, both under governments of all political persuasions, they're not subject to good cost-benefit analysis, and we think that should be part of this particular set of policies.
And I'll tell you one example of government intervention that came that in hindsight was probably a very good investment, though at the time was seriously questioned, and that's the National Broadband Network. So the NBN, when it was rolled out, was highly criticised by many as being not what the government should be doing. But if you think about the COVID years, the NBN certainly saved Australia's economy and probably saved a lot of businesses and jobs along the way.
Yeah, well, the NBN is a good case study in the need for a good upfront cost-benefit analysis that would look at different scenarios, do that sensitivity analysis and tell you something about the amount that's being spent and where it should be spent to be most effective. On the other hand, on the other side of the coin, Ross, you've got things like the intervention that went into the Australian domestic car manufacturing industry for many years, billions and billions of dollars. And it turned out that that was not such a great investment in the end.
So just one thing, because you did say that these types of interventionist measures could potentially affect the standard of living of Australians into the future. Just explain exactly what you meant by that, and how could a person's standard of living be affected?
So there's two things that could happen, Ross. Either the programs don't turn out to achieve the objectives that they were intended to do. And we're not making a judgment on that. We're just saying that is a possibility. And the second thing that could happen is that to the extent that they're regarded by other countries as protectionist measures, other countries could retaliate. And so that is happening around the world with the major economies. And Australia, as we're reliant on free and open markets around the world. We wouldn't want to get into a situation where we were intervening in certain industries and that was regarded as protectionism by other countries. And that's another way in which our standard of living could ultimately be negatively affected by these policies. On the other hand, they could turn out to be very good policies and they could improve Australia's standard of living. But the point is you want to do all of that thinking before you commit these dollars.
Which is precisely what the Trade and Assistance Review does, been going for 50 years. And Alex Robson, Deputy Chair of the Productivity Commission, many thanks for your time today.
Thanks, Ross. Good to be with you.
Coming up after the break, as consumers are increasingly conscious about what they spend their money on, more retailers are turning to loyalty schemes to encourage more shopping. And Australia's nuclear future and increasing support made the government change the messaging in its opposition to that idea. Thanks for being with us here on Business Week. On Wednesday, the Australian Bureau of Statistics will release June quarter inflation numbers, and all eyes will be on it, especially the Reserve Bank's. Stubbornly high inflation and high interest rates are having an impact on the economy, there's no doubt. Consumer spending habits, they're changing, and it's having an impact on all retailers. Now, we'll get a health check on our retailers during the next month's profit reports, but there's no doubt they're going to be having to look for ways to maintain profitability as consumers pull back. Well, Steph Nash investigated all of that with our sponsor Shopify.
I think to no surprise right now, Australians are being very considerate about where they spend their hard-earned dollars.
Consumer behaviour is changing. The cost of living crisis is having a direct impact on Australian spending habits. Shoppers are well researched and they are driven by value. It makes for a tough environment in retail.
So what we're seeing in the industry is that it is very value-driven. There's a lot of closed purses out there, a lot of window shopping, so people are only parting with their cash if they're seeing value, a discount.
Retail platform Shopify now powers a third of all online purchases in Australia. It's pulled together its intel for the 2024 Shopify Australian Retail Report. And the results are interesting. 79% of Australian shoppers are cutting back and are consciously trying to save money. 54% are seeking value, and not just when it comes to price, but that's a big part of it. It's a challenge for retailers, meeting consumer demand for heavy discounts while also maintaining sustainable margins.
What might not be so obvious is that with that reduction in costs also is correlated to a reduction in quality of goods. So while chasing costs is a strategy and everyone should think about that, all the retailers are, let's park that over there. It's a careful one that you need to be careful with that.
It's difficult in as much as retailers can respond, they're agile enough. It's just that it impacts their margins, but they know if they don't discount, they're not going to get the trading performance that they need. So it's a bit of an even balance. It's not sustainable, but it's really necessary during these times when business is so tough.
Soaring labour costs, electricity prices, shipping costs and rents are putting massive pressure on retailer margins. It's what the Australian Retailers Association calls the cost of doing business crisis.
So you've got this real collision going on. Cost of living crisis, which is slowing down discretionary spend. We're seeing this cost of doing business crisis, which retailers are grappling with, that are impacting their margins significantly. We've seen the biggest amount of IR reform in the last, 12 to 18 months that we have in decades. And that's actually impacting business, particularly small businesses that don't have functions or departments to cope with all these changes.
It always comes down to how you scale and maintain the quality.
July is a bespoke luggage label that was born just before the COVID pandemic. Thanks to social media and the rebirth of overseas travel, it's taken off, seeing massive growth in a very short time.
The growth at the moment has been phenomenal. We've seen something upwards of 640% growth year on year. The units we ship around 50,000 units a quarter in terms of how much we're bringing in. So there's quite a lot of growth, but not just in Australia. We're talking global as well.
Speaking of global, you might be seeing a lot of July in Europe this week, notably in Paris.
Partnerships for us are like the most exciting thing. It's not just for elevating the brand for consumers, but it's something fun for us to work on as well internally. We love doing them. I think one of the biggest ones that we've done to date has been partnering with the Australian Olympic team to be the official luggage supplier for the team over there. It's like such a massive thing for what we still feel like is a relatively small business coming out of Australia in the last few years. To say that we're in the likes of all the athletic brands out there is a really sort of proud moment.
Going through big economic challenges has taught founder Athan Didaskalou a thing or two about profitability.
I've learned a lot of things over the last few years, where to begin to just pick one or two, but I think probably the focus on traditional business values of sustainable growth and making sure that you're profitable every purchase and profitable within the business is just something that has probably been forgotten for the last few years, but is becoming more and more important as retail markets tighten.
A digital strategy has become very important for retailers since COVID. Much has been said about the benefits of e-commerce. To save on costs, some retailers even made it their entire business model. But now, bricks and mortar is back. It's an important part of the equation as consumers become more considered with their purchasing. According to the Shopify retail report, 43% of consumers said they preferred in-store shopping, which was up from 38% last year. It's a direct reflection of highly researched consumers who want to touch and feel before they buy.
So we're seeing online retailers particularly are now sort of seeing the value in physical stores. So, you know, the best successful retailers are what we call omni-channel retailers. They're wherever the customer wants to shop, whether that's on their mobile, their laptop or in store. So, you know, it's important to be where the customer is, and that often, you know, customers aren't sort of central to one particular channel.
Travel as a category is a really interesting one where you've got a certain audience subset that is super planned. They know exactly when they're leaving. They've got weeks ahead of them. And then you've got this other subset that leave tomorrow and just need something quick. The idea is that physical retailers are just a great experience channel for customers to be able to touch, feel, see the colours, talk to staff, get ideas, and be able to buy and leave on the spot.
How frustrating is it when you go into a store, you've purchased something online, you want to return it in store, and they can't take a return because you purchased online? How frustrating is it if sometimes if you come all the way into a store and you saw the product online, but it's not in the physical retail store? That should not be the case. And now with what is a unified view of customers and a unified view of stock, inventory, sales, that online experience and that offline experience is coming together and providing retailers with the intelligence to provide a much better experience.
With the cost of living tightening the screws, retailers can only go so far lowering their prices to appease consumers. So how else can they create value? Shopify shows 45% of respondents said loyalty rewards were a big consideration, delivering value for shoppers in terms of experience.
I think historically, those programs have been the domain of large business, very, very large brands that have a lot of money to fund those kind of capabilities technology-wise. The good news now is with COVID and a lot of the investment, that money has moved towards CTOs and what can they build to provide a better experience for the customers and what they want.
The loyalty cards have a big part to play in all of this because, you know, it's got to be mutually benefiting. So the customer, by using their loyalty card, know that they're handing over particular data that is depersonalised. What that data becomes is very useful around for retailers, how they plan their stores, how they manage the space within the stores, the targeted, customised, personalised marketing they can actually target that customer.
Central to all these points is around investment in technology, particularly in AI, to collect data, learn from that data, and create a more strategic, more efficient retail business, especially as our economic future remains so uncertain.
Look, I think the retail community now needs to be focused on making sure that they have a strategy, they're investing in technology, they're investing in their people to have the right skill set. They're also focusing on what the customer wants, which is really about getting a great deal. So I look forward, and I do think we're still in uncharted territory. We're seeing discretionary spend slow significantly. Now that's a big issue coming into the all-important Christmas trading period, where up to 2/3 of profits for a retail that's a discretionary retailer make their money. So what we do know is that we expect another big Black Friday, but Christmas spending may be subdued. So focusing on the events that matter to consumers.
There's a lot of technology that has come a long way over the last few years. There's a lot of cost pressures out there, a lot of OPEX squeezes. And I think that for any retailer that's out there, their platform should be driving their innovation. They should be looking at the innovation on your behalf. If you're out there trying to drive your own innovation story, you need to have a partner on the way.
So for us, it's been better understanding the customer, making sure all of our systems talk to each other and that there is one single view of the customer. So we know that if you're shopping online, you're shopping in retail, or you're chatting to us through customer service, we all know that you're the same person. That's a really big one that not a lot of small to medium businesses get on top of early. It's a platform choice, and it's something that we wanted to make sure that was done from day one because there's so many different things happening.
The Labor government has changed its tack on the way it opposes the idea of nuclear energy in Australia. Now, as we observed here several weeks ago, the demonising of nuclear power would only play into the hands of Peter Dutton and the opposition. So in the past couple of weeks, there's been polling that shows nuclear energy is increasingly popular among younger voters, traditionally the Labor heartland. Now, the government has three key defences against the concept of nuclear energy. One is that it's simply too expensive to roll it out. Two is that it will take too long to implement. And the third is the idea that a government-owned nuclear industry will send mixed price messages to other energy companies right now planning renewables projects. Decisions, as a result, could be deferred, making our energy outcomes even worse. But some do argue strongly that nuclear, regardless of all this, should play a key role in our energy future. And one of those is Aidan Morrison, the Policy Director of Energy Research at the Centre for Independent Studies. And I spoke with him a little earlier.
I think the Labor Party has realised now that Australians aren't very impressed about the old scaremongering and sort of saying this is not safe. It's been proven very, very safe around the world. So they're having to shift on those serious arguments, the questions about cost and whether we actually need it for the reliability of our system and whether we can get it in an appropriate amount of time. So that's the only contest. But I think that more that debate plays out, the more it becomes clear that actually the cost is quite competitive and really we're only just discovering the true cost of the renewable energy rollout, which is not proceeding anywhere like as fast or as cheaply as what has been planned.
But you've heard, I've heard, the Energy Minister, Chris Bowen, continually roll out the CSIRO numbers, pointing out that to actually put in a nuclear industry in Australia would be way more expensive than your renewables that are already in the pipeline and coming.
And I think that's where I disagree with Chris Bowen, basically, because if you look a little bit closer at the CSIRO numbers, they actually present a large range, a big band for nuclear energy, and the bottom of that band is very close to the top of the band for the renewable energy. So it's not actually a very big gap. And the reason you should only look at the bottom of the band, because that's the part where they consider actually using a nuclear power plant properly. The assumption that leads to those higher costs is that we build an expensive nuclear power plant and then only use it about 50 or 60% of the time. There's no reason at all in Australia that we should do that. If we build a nuclear power plant, we should use it 90% of the time, which is what most other countries around the world do. And that brings your cost for the delivered energy right back down to a point that's very competitive with renewable energy. And the renewable energy that CSIRO has modelled, that's the idealised version, the best version that their model could spit out. The actual version that we're building here in Australia is totally different, and the biggest exemplar of that is offshore wind, which is something like 3 times the cost of onshore wind. CSIRO's model doesn't build any offshore wind because it's too expensive. So in reality, the true costs are going to be much, much higher than CSIRO's band of renewable energy costs.
OK, so then we come back to the actual nuclear debate itself. One of the simplest things for the Labor government to do, I would imagine, is simply lift the ban on nuclear and allow the market to work out whether they want to produce wind or whether they want to produce solar, pumped hydro, or whether they want to produce nuclear. That would be the most obvious thing to do for Australia's future energy needs.
I think that would be politically definitely a very smart thing for the Labor government to do because it neutralises the coalition's kind of suggestion that nuclear energy is important and we need that reliable power and trying to say that let the market decide. I've actually written a report, though, suggesting that often the market has not built nuclear energy in the places where it's turned out to be the lowest cost. In lots of places around the world, it has been the government that has led the development of nuclear energy. Sometimes the operations are then handed over to private operators. But there is not a long track record of purely private start-up nuclear industries around the world. So I actually think it's relatively sensible. The coalition has recognised they'll have to back the first mover and make the big decisions about how much we need and where it needs to go in the grid. I think that is what's required to invest at the sort of scale that's required to make nuclear most economical. But absolutely, I think that Labor have painted themselves in a corner now by having to say that we have to keep it totally banned because there's clearly no good reason at all to keep this energy source banned.
All right, but the other problem that Peter Dutton's plan would have is that they would have to get approvals from state governments, which are largely Labor governments right now. So that's another hurdle. If you actually wanted to put those nuclear plants, be they small modular reactors or bigger reactors, into sites of existing coal-fired power stations?
That's a really good question. I've heard different opinions on this. There is actually an argument that the federal government might have provisions, if it's to meet an international treaty obligation, such as our net zero Paris commitments, to actually override state authority on this. I'm not sure. I'm not a legal expert on that matter. But I think the political question will be solved quite quickly. Simply put, if Peter Dutton wins this election, if they get a clear mandate on the referendum for nuclear, which the opposition said they want to have, if that referendum comes in and says Australia wants nuclear, I don't think the state governments are actually going to be holding up the show very long at all, because they'll see the writing on the wall that the Australian people are clearly behind this source of energy, and I think they'll fall in very quickly into line, just as you saw Federal Labor do behind AUKUS. Once we've finally broken through that barrier and committed to it, and the Australian people haven't reacted, I think all that resistance is going to evaporate quite quickly. So I'm not particularly concerned about the state governments remaining a problem. The question is whether the Australian people demonstrate very clearly that they're behind this energy source.
And the interesting thing about the Australian people right now is they're worried about their cost of living and therefore their energy bills now and in the future. And they're worried about the future sustainability of our energy grid, with question marks all the time about East Coast gas shortages and or electricity shortages in the worst seasonal conditions, up that East Coast. Now, that is about whether the lights stay on or not.
Certainly is. So I think that's where the critical political question will be answered, is when people ask themselves, what will give me low-cost, reliable electricity? They're going to be weighing up these questions. What do I believe? Is it Chris Bowen's read of the CSIRO report? Or do we look at other countries around the world and see how does energy supply look in those places that use quite a bit of nuclear energy, and looking at those prices there?
Aidan Morrison, great to chat to you today. Many thanks for your time. We'll do it again very shortly.
Thanks very much, Ross.
Coming up after the break, this week Elon Musk said Tesla will start rolling out humanoid robots in its factories. The age of robots is upon us, but it comes with a host of ethical issues. It's great to have your company here on Business Weekend. Now, if there's one thing boards, executives and others need to pay attention to, that is the breakthroughs in robotics that will come with the incorporation of artificial intelligence. From being machines that can be programmed to perform so many linear functions, robots in the future will adapt to their environment and make judgments for themselves, for better or for worse. Well, right now, after the National Robotics Strategy by the government, Australia's determined to be at the forefront of all of this development. But what are the ethical issues? Well, one of the country's foremost experts on robots and the chair of the peak body, the Robotics Australia Group, Dr. Sue Kay, I spoke to her a little earlier.
Australia's really good at actually the most modern form of robotics, which is what we call field robotics. So those are robots that can operate often outdoors in unstructured environments, often needing to operate side by side with people, so they need to be extremely safe and robust, and even operate in very remote areas where they might not be able to communicate with satellites, and so they have to be able to make a lot of decisions on their own. And that is an area where we have a lot of talent and where we've developed a lot of technology.
So I can understand with Australia's remote if you like, geography, that makes absolute sense. Yes. Are there any sort of breakthroughs? Is this coming out of the CSIRO, or is there industry that's actually also developing this?
It's both. So CSIRO developed the navigation technology that underpins those huge robot mining trucks that you see, which we call autonomous load haulage vehicles.
I think but there's some 700 of them in the mines in the Pilbara right now. There's a lot of them now. So they're becoming if you like, first nature. They're safer. Yes. They quite clearly can be controlled, and they can work 24/7.
Yes, that's right. And Australian industry is very good at building smaller versions of those machines for uses not just in mining, but also in agriculture, in emergency services, in defence. And we're now looking at how that can expand into other areas like construction, oil and gas. There are a lot of use cases for those new types of robots.
And I think I've told you before that I've seen this happen in the mining industry, underground mining, where robots are used to go to places where human beings should never be.
Yes.
And the fact of the matter is that broadly you try and get your robot out safely, but if there were an accident, at least no life is lost.
Yeah, because it's just robots. And while we can get quite attached to the robots, obviously we would prefer that robots get sacrificed in those very dangerous locations. And usually that is the first use case for introducing robots. It's to be able to remove people from harm's way and actually have the robot do a dangerous task.
Okay, so then add artificial intelligence into it. As I say, at the moment, those functions are relatively what I'd call linear, fairly straightforward. They're basic functions that have been programmed by human beings with the software, but it's when those robots start to have decision-making of their own that the ethical dilemmas may start to appear.
That's true, although robots at the end of the day are still programmed by people, and the big advantage now of generative AI and tools like that is that it makes it much more easy for us to communicate with robots. So rather than having to program a robot, you can actually just verbally tell the robot what you want to do. But in most critical areas, there is usually always a human in the loop in the decision making, and so that's always an important consideration when you're designing a robot, so that people can have confidence that it will behave in a predictable manner and that there won't be difficult outcomes. Australia has a lot of safety regulations in place that would ensure that you are not likely to put in a robot that could cause any harm to a human being.
So what is most important and what is most valuable when constructing a robot? Is it actually constructing the brain? In other words, the software and the programming of that robot, or is it the actual building of the physical machine?
Oh, it's a bit of both. I mean, it has to be that combination of software and hardware, but I think the exciting times that we are in now is that with the advances of generative AI, we can make those robots much more clever and responsive to humans and accessible even if people aren't computer scientists themselves.
So in other words, there's great opportunity for Australia to create the hardware, but there's also the chance for Australia to create the software. We've got the skills in both those areas.
Yes, exactly, that's right.
And do we have enough of the people to build the robots on a scale where it can be globally commercial? That's the other thing that Australia has always struggled with.
Yeah, at the moment Australia is actually trending pretty well in terms of us being able to keep our talent in artificial intelligence here in Australia, but that's always subject to change depending on how attractive it is for those people to move overseas. But I mean, I think we're very fortunate that we live in such a beautiful country that a lot of people are happy to come to Australia and I guess lend their skills to the country. So it's not a problem for us at the moment. There is a global shortage of that talent, but I think the other opportunity with generative AI is that we can now train people up to be helping to develop those robots much more quickly than we have in the past.
Many thanks for your time.
Thank you.
And that's it for the program this Sunday. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but of course you can keep up to date with all the latest business news with our daily program Business Now, 4:30 p.m. Eastern Time, and via our website skynews.com.au. I'm Ross Greenwood. Thanks for your company. We'll see you next week.